மேடம் நீங்க பிக்சர் ஸ்கிரீன்ஷாட்ஸ் நீங்க எடுத்துக்கோங்க. மேடம் ஸ்கிரீன்ஷாட்ஸ் மட்டும் நீங்க எடுத்துக்கோங்க.
Okay ma'am, okay.
Shall I start?
Yes ma'am.
A warm good evening to all. On behalf of Salem, Puducherry and Vellore branches of SIRC of ICI, I welcome you all for this third day of virtual GST web series. And it's my pleasure to welcome our today's speaker, CA RAJESHKUMAR T R. He is going to enlighten us with the topic time of supply. CA T R Rajesh. He is a practicing chartered accountant, practicing indirect taxes since 2002, completed schooling, graduation and CA articleship at Tumkur and later on moved to Bangalore. He is practicing in indirect taxes at Bangalore. Earlier, he was one of the senior partners in Hira and Associates Chartered Accountancy firm with good repute in the field of indirect taxes for more than 17 years. He has written many articles on central excise, service tax, VAT and GST for various professional journals and presented number of papers in various seminars and workshops. He has authored number of books on goods and service tax, central excise, service tax, Karnataka VAT as author, junior author as well as assisting author. To name some of the books: Handbook on Annual Returns and GST Audit, GST Ready Reckoner, GST Traffic, Practical Guide to Service Tax, Central Excise Made Simple, Central Excise Law and Procedures, and KVAT Audit Manual. He has contributed substantially for compilation and revision of study material on indirect taxes published by ICAI for CA final students. He has also contributed for background material on GST and UAE VAT published by ICAI. He is a faculty for different programs conducted by ICAI addressing members. He also invited as guest faculty at colleges to address students. He has invited as resource person by National Academy of Customs, Income Tax and Narcotics, as well as Central Excise and Service Tax departments for giving lectures to departmental offices. With these few words, I'm very happy to introduce CA RAJESHKUMAR sir to you all. Over to CA RAJESHKUMAR sir.
Yeah. I think warm good evening to all my professional friends. It is pleasure to be part of this web series program where three branches have come together jointly to just understand the nitty-gritties of the various aspects of GST law. As I am seeing, the GST law today has already crossed more than 2 years. Each one of us have felt the importance of this law and have understood the nitty-gritties of the law to some extent.
Please unmute sir, unmute yourself sir, sorry.
Okay, warm good evening to everyone. In fact, it's indeed a pleasure for me to be part of this wonderful web series program on GST, hosted by a combined effort of three branches. And we all know the GST law has already crossed more than 2 years, and we have felt the importance of this law on the day-to-day transactions of personal life and more also in a professional life. In fact, when we are finalizing our financials, or especially when many of us who did audit for 17, 18, where 1819 is still due to be prepared, we may face certain challenges. I think this series, in my understanding, is going to help all of us to come out with some solution wherever we are stuck with. In fact, practically, I am seeing so many chartered accountant friends have already know the basics of this law. However, at some point in time, they want some confirmation to that effect because they're not sure about certain things. But these type of programs would surely, in my understanding, is going to give that comfort of taking a particular stand and move ahead in their process of carrying out their functions as an auditor, as a consultant, or in any other capacity dealing with this law. I think my presentation is with regard to the time of supply. Per se, the topic is concerned, it is more to do with the operational side of it. In the sense, when we are operating the law, this is only one of the small elements, but very, very important element, which any person who tries to follow the law has to be aware of this. There are various practical challenges which people may face, but we do not get into see how to resolve it. Rather, we try to continue to take a stand based on the industry practices. So in the course of my deliberation, I am trying to confine my subject related topic to minimal and try to discuss the issues which members are facing upon you all asking me a query about it. So if you can stop me at any given point in time to asking your query on any of the topic which we are talking about. When I'm explaining any concept, if you feel in the area which you would have dealt, there is some issue, you can always raise your hand. I think there's some methodology to raise our hands in this particular thing. I think maybe the host will explain. So in such a scenario, where I'll break after certain time on completing one concept and cover those issues and proceed further. Hope that that would be fine, the chairmen of the various branches. So I'm going to share the screen. Is my screen visible?
Yes, sir. Yes, sir. Uh, Please give us F5, sir. Please press F5. It's yeah, fine.
Okay. Okay. I think, yeah, I would proceed. Firstly, at the outset, I would like to thank all the three branches which has given me this wonderful opportunity of sharing whatever little knowledge I do have in this area of the GST law. Before I go into the topic, I chose the picture which is on the screen, the clock and the distorted clock rather. The time of supply is also in the same fashion. It is distorted. It is not so clear. It appears to be clear, but it is not clear. You will find a lot of challenges when you actually get into the understanding of the provision or applying the provisions into the practical scenarios. So we need to be very cautious and clear about, otherwise of which the implication would be resulting in payment of interest and sometimes even penalty as well. So we need to be cautious about that. Before going into the deliberation of time of supply, I always want to start from the basic elements of taxation. I know in the earlier session, maybe first session, this aspect would have been covered, but still I want to highlight a couple of aspects over there. Firstly, in any taxation, there are three aspects or an elements. Firstly, levy or a charge. The next is an assessment. And thirdly, the collection. When we are talking about levy or a charge, it is the aspect wherein the law is going to define the subject matter upon which the tax will be leviable or attracted on happening of certain events. It's also called as a taxable event. Under the sales tax law, effecting a sale was a taxable event or a levy. In the central excise law, manufacture of excisable goods was the charge. Then when it comes to income tax, earning of an income, though there may be some deeming provisions, yes, the essence is earning of an income. Similarly, when it comes to your property taxes, you're owning a property, so the property tax, the profession tax, you're carrying on a profession, so the profession tax. So there should be some activity which subject matter of a tax should happen, which will attract the levy. What it means is, upon happening of that event, the government, the parliament makes a law, the government is given the power to collect the law taxes. So once anybody falls into that particular ambit, then the government gets the power to come and collect the tax from such persons. So the levy is going to create a right of the government to collect tax. Now somebody has fallen into the clutches of that particular levy, where it is clear that he is liable to pay tax. Now, having admitted or accepted that the fact that they are liable to pay tax, what would be the next question? The next question is assessment. Assessment is the point where somebody has to quantify the taxes which is liable to be paid. Now, the quantification requires the value, the rate of tax, exemptions. Can anybody, need not reply, but at least can think of on this? There are multiple events which comes in a particular transaction. What is the point in which we need to catch hold of the rate, we need to catch hold of a value, or which we need to catch hold of an exemption? In other words, there is a change in the valuation methodology in the law, or there is a change in the rate of tax, or there is a change in the exemption notifications. Now, the event has happened in one of those periods, then the question would be that which one of them we need to cover or which one we need to catch. So I think that is where there is a issue where in the GST law, it is not telling what is the point in time of the value to be taken, or what is the point in time which we need to refer to in a particular exemption. The rate of tax, there is some mention in the point, section 14, but not as far as the value or exemption is concerned. Okay, we'll take up that little later. Now, having quantified that tax, the next question would be payment of the tax from the assessee side or the collecting of the tax from the government side. So the collection of tax is concerned, it will define a particular point which will say this is a point in time you need to pay tax. So, and how to pay tax. If tax is not paid, what are all the remedies available to the government? All these will come within the third limb. If you see the law will be designed covering all these aspects in different provisions sequentially. Now, when it comes to time of supply, there is what it means. Basically, it is a point where supply is deemed to have taken place and the taxable event has occurred, and supplier is entitled to charge to customer on that point in time. So basically, it's a point in time where the tax needs to be collected by the government. I think there somebody raised a hand. If there's any question on this point, I can answer that. Otherwise, I'll move on further. Somebody raised a hand, so shall I proceed further? Fine.
I think my mistake he raised.
Okay, fine, no problem. Coming into the aspect of this time of supply, in the goods, if you take an example of a sale of goods, or from the perspective of a excise duty on manufacture, or from the customs duty perspective, there's always a particular point in time which they say this is a point in time which you need to consider for the purpose of payment of tax. For example, at the time of clearance of goods, when it comes to the import duties, when it comes to the manufacture, the levy was on the activity of manufacture, but the
Sir,
sorry,
one person has raised the hand. Ashok Kumar, sir.
yeah, okay.
Ashok Kumar, sir.
Yeah, please, sir. Mr. Ashok, please.
I don't know, sir. You please continue,
fine.
sir.
No, what I think that may create flow. I mean, disturbance.
Yeah, we'll take up the questions at the end, sir.
Yeah,
That will be
fine.
the
We will
better.
do that.
Okay.
We will do that.
Okay, sir.
But meanwhile, if anybody has anything, they can go on posting on the chat box. Otherwise, they may forget it. So we will cover each of the points which is there in the chat box at the end. Okay.
Okay. Okay, sir. Fine. Thank you.
Thank you. Sorry for the confusion which I created. Right. See, the time of supply, as I said, for the goods, it is very easy to identify. But for the services, it's always a difficult because services are intangible. Now, when it comes to that is where in the service tax law, the law has defined notionally a particular point to be the time of supply. But whereas in the GST law, when they had to come up together, it was difficult for them. So therefore, they have tried to define time of supply for goods separately, for the services separately. Though it appears very simple concept earlier of the three events, etc. But practically, when we look into the scenarios, we'll come across there will be a lot of challenges, which I will take few examples when I will be dealing with it. At the same time, there will be a reverse charge. There is also, issues when to pay tax in case of a reverse charge, and also in some cases where the ITC input tax rate, when we can avail, all those questions will come up, which we will try to address. When it comes to why do we require point of taxation? Sorry, time of supply to identify the point at which the tax to be charged to customer. We are all aware of it. Then identify the applicable tax rate and identify the applicable provisions relating to the taxation and identify due date for payment of tax. Though I have mentioned here the third bullet point, applicable provisions for the taxation, law is not envisaging, but we are assuming that the time of supply, when it is being constituted, all the relevant aspects relating to the value, rate of tax, applicable exemption, we need to apply these aspects. Okay, so one of the aspect deviating from it also I will explain when I go further. What are all the provisions which we need to be aware when we are trying to understand this concept of time of supply? Section 12, which deals with time of supply for goods. Section 13, time of supply for services. Section 14, how to deal with the situation of change in rate of tax. Section 31, which is the provision relating to raising of a tax invoice is very, very, very important for us to understand time of supply. In addition to these specific provisions, we also need to go through the definition section as such, like 232, which defines what is continuous supply of goods, 233, which talks about continuous supply of services, 293 recipient, 296 removal, 298 reverse charge, and 2105 dealing with supplier. Section 12(1) says the tax shall be paid on the time of supply of goods and which shall be determined as further explained. So basically, if we see section 12(2) says your time of supply shall be earlier of invoice or payment. That is a rule we can take it for. Why the government would have not simply said invoice date will be sufficient to consider or will be considered the time of supply? They said the people may not raise the invoice at all. So, or always the government wants revenue as early as possible. So they always try to say earlier of the event will be the time of supply. But that will cause a lot of practical issues, especially the time where your liability to pay tax will accrue will be different, your accounting will be different, your documentation date will be different. So take a situation where for the purpose of your books of accounts or recording your financials, sometimes you need to accrue the income because the work has happened, but you are not raise an invoice because the terms of the contract to raise invoice has not occurred. So you recognize the income, like calling it as an unbilled revenue, and book it as your revenue. Whereas the invoice would have not been raised yet. In such a scenario, your financial income or the revenue will be higher as compared to the revenue which would have been declared with the government in the returns. So there will be a difference. Take another situation where you receive an advance. Advance will not be treated as a revenue, but for the purpose of GST, you are liable to pay tax. So there is always a difference from the books of account vis-a-vis the turnover as is required to be declared in the returns. You may ask me, sir, we are not dealing with the returns or the topic on annual return or audit, but take a situation of a accountant or an auditor or a person who is preparing a financial statement. How he is going to balance all these aspects? How is he going to keep his books of accounts in line with all the law compliant, especially in the present situation where the people are not able to come to offices correctly and not able to provide the information correctly to the auditors? How an auditor would certify the books of accounts, and especially as at least I am seeing, there's a lot of pressure from the assessees, from the auditor to finalize the balance sheet as on March 2020, because they need to give it to the bankers where they need to extend the loan or they need to get the loan sanctions. So without you ascertaining the reconciliation of these figures, it may be difficult for you to clearly put across the figures in your financials and audit the same. So I think these are the challenges which will be there. Now, so you need to be cautious about the fact that there will be differences between your books of accounts and the returns. Also, I've seen at many places, auditors or the accountants or the consultants who file their GST returns they do not actually look into the invoices or records or whatever it is. They simply take a figures from the tally or a books of accounts and say this is a sales into so much percentage and this is the value of the taxes to be paid, and they will see the purchases and the credit relating to that and compute the credit and compute the net tax payable and pay tax. Going by the provisions of the law, such practices are totally incorrect because they would have not at all looked into the provision of time of supply of either of goods or services. So it is very, very important for us to understand in general, the books figures sales should not match to the written figures. If it is matching, you need to be much more cautious or conscious that there may be some error or there may be some point which would have missed out, and look into the tax liability which is computed and paid or computed and shown as payable. So this is one word of caution which I would like to give to all the member friends. Now, going to the provision in respect of our goods, actual date of our invoice issued or the last date on which the supplier is required to issue the invoice. If you see here, the invoice to be issued is guided by section 31, where as far as the goods is concerned, it is going to refer to the removal date, whereas in the time of supply, we are not directly looking, we are looking for an invoice date. And if somebody has defaulted the invoice date, then we look at the last date on which the invoice should have been issued. So again, in other words, if I merge this provision and the next one where the date of payment received, whichever is earlier, to simply state the date of removal, the date of issue of invoice, or the date of payment whichever received, whichever is earlier is the time of supply in respect of goods from the supplier's perspective. I repeat, supplier's perspective. Why I highlighted the fact that it is from the supplier perspective is for the reason because though on advances received, as a supplier I may pay tax, but if you are the recipient of the supply which I am giving it to you of the goods, until you receive a goods, you are not entitled to take a input tax credit. Similarly, even if you would have made a payment to me and as an advance, I may have to pay tax, but you as a recipient is not entitled to take a credit. So this is what is the law under section 12. However, there was a hue and cry when the law was introduced saying that if I have to pay taxes on advance payment made in respect of a goods, it is going to be very, very problematic. So later on, there was a notification which was issued exempting from payment of tax on this concept as far as the goods are concerned, and they relaxed the payment of tax on advances in respect of a goods that was confined only in respect of a advances for services alone. So this is what is the concept of time of supply in respect of goods. Whatever till now I explained is clear when there's a one-time transaction. But when it comes to continuous supply of goods, we need to understand what is the meaning of this continuous supply of goods. It is defined to mean a supply of goods which is provided or agreed to be provided continuously or on recurrent basis under a contract, whether or not by means of wire, cable, pipeline or other conduit. I stop at this in goods, what is the meaning of this term continuous? How we have to read this term continuously? Recurrent basis. So there are two things which it is mentioning: supply of goods continuously or on recurrent basis. Continuous flow of water in a pipe is a water is a goods, so there is a supply of a goods continuously from a person to another person. Recurrent basis, you ask a particular person to supply water bottle every day for your office. Recurrent basis. Now you may say, I will ask you whenever I want, but you give me a bill for the entire month together. This recurrent basis, should it be on a continuous basis? In the sense, should be a fixed periodical interval, or as and when asked can also be called as a recurrent basis. In my understanding, considering it to be a wide terminology, even we can do so. Because why I'm explaining this is, maybe you have to take an example, you will go to the supplier of a goods and say, my boy will come and collect the goods as and when required. You note down in a particular book. At the end of the month, you you give a total goods which is taken by my boy, and then you raise an invoice. So this is also sort of a recurrent basis. Now, either is continuous or recurrent basis should be contract. As I explained just now, if I go and have this arrangement with the shop person, then that is a contract which is agreed between me and him, which is there on a which has agreed to supply a goods on recurrent basis. So therefore, no issue. This whether or not by means of a cable is merely to clarify the fact. Don't assume this is applicable only in a scenario like a wire, cable, pipeline, or conduit where things move continuously. It can be in any other means, just like what I just now explained. So in your scenario, practically, if you're finding it difficult in a certain scenarios, you can think of converting the normal individual supplies into continuous supply to avoid documentation as well, and see whether you can fit into the scope of this particular ambit, and plan the tax payment to be optimistically as far as the cash flow is concerned, and as well as documentation is concerned. You can design your structure considering these aspects. This is one point I thought I will bring to your attention. Further, it also gives a power to the government to specify certain type of supply of goods to be a continuous supply of goods. As of now, there is no such notification issue. So this is what we are talking about as far as the continuous supply of goods. We would have understood the term continuous supply of services, but continuous supply of goods was a new concept which came in only under the GST, which was not there either in the VAT or central excise or even the customs present manner. So I think this is something which you can note down. Now, when an invoice has to be issued in case of a continuous supply of goods, invoice is required to be issued in terms of section 31(4), where successive statement of accounts or successive payments are involved. The invoice shall be issued before or at the time each such statement is issued. As in the example which I said, my person takes the goods as and when he requires, but he is supposed to give me a statement of accounts on 1st of next month. Scenario 1. Scenario 2, 30th last day of this month end. What's the difference? If I have to give a statement, that particular supplier, the shopkeeper is going to give me a statement of accounts on 30th or 31st of a particular month, then invoice also is required to be issued on or before that date. On the other hand, if it is on first, then invoice has to be issued by first. What difference does it make of these 2 days? The difference is, if you are making the statement on first, the tax to be paid, you will get 1 more month extra. Whereas if you make the statement date as the month end, then you have to pay 1 month earlier than in other case. So in fact, while somebody is drafting the agreement or looking into the agreement, they can always have this aspect looked into and say this particular statement or payment which is to be made, what is the date of that particular statement to be issued or the payment to be made, is something which should be made very, very clear, so that the taxation point of time, point will be ascertained through that. So you can in fact do some small minor planning as the cash flow, considering the placing of that timing at appropriate place. Now, if the payment is received in advance, then obviously we'll be raising a invoice before that. That will become a time of supply. So please note, so it is not only the invoice, you have to look into the agreements or contracts, essentially, which we may overlook many times. So if something is being agreed, we have to look into the time when we are supposed to have raised a particular document or received a particular payment, though there may be a delay, that date become the date which is defined in the agreement or contract will become important. So be conscious about this fact. In fact, in services, the date of invoice is important. Here, the statement is important. I will take one example of this and where we go wrong in practically when we are handling it. In the same example, which I told, the contract says the shopkeeper will prepare a statement on 30th or 31st, as the case may be, and send it to me. I am going to verify that statement based on my internal records and give him a confirmation or certification of that particular statement, upon which he shall raise an invoice. Say this is what is the terms in the agreement for goods, let's assume. Now, as per the provisions of the law, in fact, for raising a GST invoice, the statement which is there, that date becomes very, very important, and it is not the actual raising of an invoice. Then you may ask me a question, sir, a contract is permitting me to raise an invoice at a later point in time. That invoice which you are talking is your commercial invoice, not a GST invoice. For the understanding of as a practical thing, you would have combined the GST invoice into your commercial invoice, having all the features of it into the commercial invoice. That does not mean that your GST concept of raising an invoice would be succumbed within your contract terms of raising an invoice. In other words, you may have a different points of time for raising an invoice commercially as per the agreement, but as per the GST is concerned, you are supposed to raise an invoice on a particular date or time. You are supposed to raise. Even if you don't raise, they will ignore that date and take the date on which you should have raised an invoice for the purpose of payment of tax, as a due date of payment of tax, and applicable interest will be collected from a person. So this is a point which I wanted to highlight on this. Section 31(7) dealing with invoice talks about in case of sale of approval, when do you raise an invoice? In case of sale of an approval basis, invoice are to be issued on either of these two, whichever is earlier, before or at the time of supply, or 6 months from the date of invoice. Example, I have sent my goods for approval, sale on approval basis. He looks at it or have it with him and confirms that I want it. Till then, I will not raise an invoice. Once he confirms, then I will raise an invoice and the supply may happen. But if somebody do not confirm anything up to 6 months, then what happens? It will be deemed that the supply has happened and it requires to raise an invoice on completion of 6 months from the date of removal. Practically, there are scenarios where sometimes there will be lot of returnable items. If you say send 10 items, mostly 4 to 6 items will get returned. That is what would be the trade practices. In such a scenario, maybe somebody may opt to look at this provision and see whether they can fit their methodology of transacting and invoicing and payment of tax under this mechanism in order to avoid unnecessary payment of tax or raising of invoice and issuing a credit note and dealing with such complexities. They can look at this provision and according to the terms and conditions, looking into the business side aspects as well. In case of job work, somebody sends a goods on job work. The inputs are supposed to be received back within 1 year and capital goods within 3 years. If it is not received back, it would be deemed to be supply in the hands of the principal on the date when such inputs or capital sent out. Take an example, somebody has sent inputs 1.5 years back to the job worker and it was not received even after the completion of 1 year. On completion of 1 year, it is deemed to be a supply and the person who has sent the goods is required to pay tax. Now the question is, when was the time of supply in such scenario? Is it the date when the goods were sent out, or is the date when the lapsing of 1 year from the date of supply, sending out the goods is completed? The law has mandated that the tax has to be paid from that day as it was liable to pay on that day, plus the interest from that day. So it is making the time of supply giving a retrospective effect. Now also see a scenario where whether the job worker can take a input tax of such taxes paid by the principal. Obviously, he would have not got the invoice on that day where the deemed supply has happened and he would have not paid for it. 180 days would have happened and the time limit to take input tax credit would have also over. So therefore, there will be a challenge for a person to take a credit in this scenario, which is an issue which is to be addressed appropriately. There may be a scenario where there will be a debit note raised for difference in value. The law says that whenever you raise a debit note for the difference in value or the taxes, it shall be declared in the return in the month in which you have raised a debit note. When it is asking me to declare in the month in which the debit note is raised, and I add the tax liability in that month, whether the time of supply is in that month when I raise a debit note, or it is as per the original invoice date, and whether the interest is applicable on that delayed payment is not forthcoming anywhere. So this is going to be the matter of debate which is going to come in the future days, which we need to be aware of. When it comes to the reverse charge RCM in respect of goods, we have to consider earliest of these dates. That is date of receipt of goods, date on which payment is entered in the books of the recipient, or date on which payment is debited to the recipient's bank account, that is when it comes with payment, and 31st day from the date of issue of invoice by the supplier. Where it is not possible to determine the time of supply in the three other cases, then the date of entry in the books of account of the recipient. So now take a scenario that somebody supplied a goods on which I am liable to pay tax as a recipient on that notified goods. The 30 days time is, he has raised an invoice and 31st day gets over. On completion of 31st day, even though I have not made a payment to him, I am supposed to pay tax. If I have made a payment before that day, then I need to pay tax on that day. Or if I have received the goods, then I have to pay tax on the receipt of the goods. There may be a scenario where I don't receive goods. It would have been in his premises, but invoice is raised. I have not made a payment. Or he has not raised an invoice, but he has affected that, the goods, the title is transferred through a document, but the goods is still remaining with him, where I have not made a payment and he has not raised the invoice. Then the last scenario where the date of entry in the books of accounts is going to come into picture. When it comes to voucher, I'm going to skip this concept of voucher for the time being. I will take it up only in question and answer session. If somebody has any issue relating to voucher, then only I'll take up, then otherwise I'll not get into this voucher thing, or I'll cover the end after if there's no questions are there on this. There is one restitutory provision which says where the time of supply is not determinable, then in case where a periodical return has to be filed, be the date on which the return is to be filed. In any other case, be the date on which the tax is paid. I am failing to understand when I am not sure what is the time of supply pertaining to which that periodical return belongs to, then how do I take the due date of that month's return and making to fall into this particular return? So there is a challenge in my understanding to apply clause A, but whereas B is concerned, we can surely adopt whenever the tax is paid, we may have to adopt that. There is one more provision, the valuation, where it says if somebody is required to pay interest, late fee or penalty for delayed payment of consideration, then the date on which the suppliers receive such addition in value, that will be the time of supply. In other words, though the provision mandates to include a this interest, late fee and penalty in the value of supply, you need not worry to include it into the tax and pay tax on it until you receive that additional value. Maybe where there is an uncertainty of a particular value, or you are not sure that you are going to get the full value, maybe you may look at this provision and try to design your transaction through a documentation, whether you can take advantage of this. I think I have completed the time of supply essentially as far as the goods are concerned. Then I leave open the floor to the participants to ask question on time of supply of a goods or any other basic topic which I have explained till now. Over to you, ma'am. Ma'am, anybody, any questions, ma'am?
Yeah, we haven't get anything in chat box.
But anybody wants to ask, you can just check out, ma'am.
Yeah. Those are having any questions, please raise hand, or they can unmute themselves and ask the questions. So nobody is raising hand, so you may proceed, sir.
No, I am not sure whether people are able to comprehend my deliberation, or should I change my approach. Anyway, let me just see. Because no response, no question, I am really bothered.
No, sir, it's really a very nice session. It's going very fine, sir.
Okay, fine. I'll go ahead. But I'm just telling that if participants ask questions, it gives little more energy and things for us to look into it. Fine, no issues.
Okay, okay, sir.
So one question, sir, received from the chat box.
Yeah. Can you just how do I see?
Please read it out, ma'am, please.
A periodical supply documents to accompany all delivery. That is a question raised, sir.
Okay. Probably, I think the example which I was trying to give, that a periodical statement which is required to be issued or raised, so that date will be critical. That will be considered to be the basis, I think, for the purpose of time of supply of goods in case of a continuous supply of goods. Whether the supply proof somebody has to enclose will that make any change, or probably that is what is a question I'm envisaging. It is all dependent upon your terms of the arrangement. If you can design in your contract or agreement to say a provisional statement for approval shall be sent on so and so date. Upon confirmation, a final statement shall be issued on so and so date, or so within so and so days of confirmation, or without confirmation, that will be considered as a final on particular date. Then that can also postpone your liability to pay tax, because the provisional statement cannot be considered as a statement as per the agreement as well. So therefore, that may the time of supply gets postponed to that extent. Probably whoever has asked question.
So the question was, if the person supplied for continuously for a month, but the bill was raised only at the end of the month. What for each supply, what document should be go along with the goods?
See, there are two things. that is your e-way bill provision is independent of this. E-way bill is only for the movement of goods. So the provision of e-way bill, what are the documents for movement of goods which is there in the law, like delivery challan, and that can go along with the goods, clearly mentioning under the supply of a goods on a continuous supply of a goods in terms of contract so and so can be mentioned there under the delivery challan, and it can be dispatched along with the e-way bill. And e-way bill also you can mention the same. But however, whereas the invoice will be issued only at the periodical end, because it is not a part of the individual supply. A supply is not completed. It is supply is going on continuously for the entire month. So your delivery challan or any other movement document which is created by that person for the movement along with e-way bill would suffice as far as the movement of goods is concerned. I think that would have answered the question.
Yes, sir. Yes, sir. Thank you, sir.
Now coming into the services, services is a little bit different, because you need to refer to section 31, the rules made thereunder, the invoices made. Generally, when we provide a one-time services, the provision are different. Continuous supply, the the provisions are different. So we need to be careful whether a supply is a continuous supply or not a continuous supply. When I go to the relevant slide, I will explain the difference between the same. Okay.
Excuse me, sir. Actually, the question raised by Ramu sir, that question, the periodic, that question was raised by CAV Ramu. He has unmuted himself and he wants to ask something.
Please, madam, please. I'll be happy to answer.
Sir, please, sir. Ramu sir. He has unmuted, sir, but he is not talking, it seems.
Okay. No issues. At the end, if he gets
sir,
an opportunity.
I think the question was
right.
sorry.
Fine. Thank you. Yeah. When it comes to time of supply for services, if invoice is issued within the prescribed time under section 31, that is 30 days in the normal course, 45 days in case of banking, insurance, financial insurance, NBFC companies, then they will consider the date of issue of invoice or the receipt of payment, whichever is earlier. So we are clear with that. If somebody do not raise an invoice within that 30 days or 45 days, as the case may be, date of completion of service or receipt of a payment, whichever is earlier. If both does not apply, then whenever the recipient shows the receipt of service in his books of accounts, please understand, when this clause, the third aspect will come into picture. Somebody has provided a service, but you are not able to ascertain, in the sense the department officer is not able to understand when the service is completed, or it is not known and no invoice is raised, but the recipient would have accounted for the same, then they will catch out, because they would have come from third party verification or whatever it is. They will ask him that, when did he receive, that will be taken as a basis for calculating the time of supply. Now, talking about, presently being discussing on time of supply, please understand, when the law is made, it is not only for the normal circumstances where in the regular course somebody is supposed to pay taxes. They need to look at all the scenarios as well. In other words, If somebody has not paid taxes correctly and department tries to ascertain the tax payable by such person, it is essential and important under the law that they need to quantify the tax payable. They cannot be a simple mention that you are supposed to pay tax or you compute and pay. How to compute also they should be having a clarity. Please note that the notice which is issued for demanding any taxes should quantify the tax. While quantifying the tax, they need to establish the correct aspect as to the levy, which I explained in the beginning, the aspect as to the quantum of tax correctly, whether the valuation is correct, the rate of tax is correct, all those things they have to say, not only some notional basis, they need to give a reference of the notification or the what is the classification adopted, what the rate applied for the same, all those things they are supposed to bring out in the notice. Then when they are supposed to have paid and why they have not paid. Why is this required, that when they are supposed to pay? Because to compute the interest without bringing out that aspect, they cannot say, they cannot allege that pertain to which period they are making a demand. So it is essential even for the officers to ascertain the time of supply and put across that aspect in the notice to demand taxes. If somewhere in the notice any of these aspects have been missed out in the notice, please mark that point and raise a preliminary objection on the same and say, since that has not been ascertained, the quantification and the amount, though the legally you would have done a mistake, but if that aspect has not been brought out in the notice, you can clearly say, since this aspect has not been brought out, the entire proposition made or the amount proposed to be demanded is invalid or improper, therefore the entire proceedings in the notice should itself go. Please also note this one more important point. Under section 160, there is a mention that if something has gone wrong from the department side, you should object at the first opportunity you get it. If you do not object at the first instance, at the subsequently you cannot go ahead and object it. So whenever you are preparing a reply to a notice, or if somebody receives a notice, while suggesting to please look at these aspects also, including the time of supply, whether they're properly determined. If it is not determined, then you can simply say that the quantification, etc., whatever is made is improper, therefore the demand is not sustainable. I think this is one thing which, in that context, you see this third limb, then you will understand that why this provision has been put across. So that means they need to ascertain from the recipient. If somebody has hidden the tax supply, so then they need to essentially ascertain from the recipient that the fact of receipt of that supply, they cannot assume. So this gives another implication of what the investigation should have done. Okay. If some payment is received in advance, the supplier shall issue receipt voucher and not a tax invoice. This we are aware. However, we have to pay the tax based on the receipt voucher, not on the tax invoice. However, there is a relaxation for amount less than 1,000, which we can ignore for the time. There's a duplication over here. Okay. I'm moving on to this continuous supply of services. I want you to be with me when I'm reading this definition. Continuous supply of service means a supply of services which is provided or agreed to be provided, no issues, continuously or on recurrent basis under a contract for a period exceeding 3 months with periodic payment obligations and include supply of such services as the central government may subject to such condition as it may by notification specified. Please tell me, or at least think over, in the development, joint development arrangement between the landowner and the developer, is there a continuous supply of services? Looking from the perspective of a landowner, where there is said to be a transfer of development right by the landowner to the developer, is it a continuous supply of service? Is the right going to be given continuously, or the right is given one time? Please look at the next aspect. Okay. When, in my understanding, since the development rights are given in one moment on the entering of a joint development, there is no continuous or recurrent supply of services. Assuming for a moment, no, it is only an permission or agreement entered, but the right is being continuously going on throughout the period of a contract, so it can be construed to be a continuous. For the moment, we'll agree that. Move to the next point. For a period exceeding 3 months with periodic payment obligations, is there anything which the landowner is going to get periodically from the developer? Answer is no. So the supply, if any, I repeat it, because I have a doubt on that itself, which is not a, this is not a session to discuss on that. When any real estate issue session comes, I will explain in detail. So then there is no periodic obligation from the developer to the landowner. Therefore, there is no, it is not a continuous supply of service. So this principle is not at all applicable, whatever we want to discuss here. I'll move on to the, now from the perspective of the developer. I am a developer, you have given me a land, I am supposed to do a construction, and after construction I am going to hand over the portion of the constructed area to you. Please tell me, in this entire scenario or arrangement, is there any payment, periodical payment obligation from the landowner to me? Answer is no. So therefore, I am not falling within the ambit or clutches of the continuous supply of service in case of a joint development agreement where between the landowner and the developer. Now, since we are talking about the transaction of a joint development or a construction related, then when does this particular supply, continuous supply applies? In case of a sale of a flat, or rather agreement to sell the flat entered into by the developer with the prospective buyer, where he says, I'm going to construct this, or give it this, you need to pay so much percentage on foundation, on first slab, on second slab. There will be
Yes, sir. Your voice is audible, sir.
Yeah. Okay. Because I show that you are muted. Okay. Fine. Thank you. Right. I think so. When in such a scenario, there's a periodical payment obligation for the prospective buyers to make a payment to the developer for the services which is being provided by the developer to the prospective buyer, where the agreement is entered into before receipt of a completion certificate. So in such a scenario, the transaction between the developer and the prospective buyer is no doubt a continuous supply of service, whereas the transaction between the landowner and the developer, or from the developer to the landowner, it cannot be construed as a continuous supply of services. So this is the point with which I think you are able to understand the how we see the definition of the continuous supply of services. In fact, some of you may get a doubt. So it's a works contract, where is the question of it being treated as a services. Hopefully, in the first session, Raghavendra would have discussed about second schedule, the classification of supply as a goods or services. Since the construction or agreement to construct any flat, any building, complex, civil structure, blah, 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 before obtaining a completion certificate is constituted to be supply of services. Therefore, the principles of continuous supply of service for determining the time of supply has to be adopted and not that of a goods. So this is one aspect which I thought I'll tell you. When it comes to raising of an invoice, in case of continuous supply of services, where the due date is ascertainable for payment, due date for payment is ascertained from the contract, the invoice shall be issued on or before the due date of payment. Please compare this with a normal supply of services. In case of normal supply of services, somebody who is doing that will get 30 days grace time to raise an invoice. But whereas in case of a continuous supply of services, where there is a due date prescribed in the contract for receipt of a payment, the invoice should be issued on or before that date. There is no grace period which is given. So in such a scenario, if somebody do not raise an invoice, obviously time of supply is going to switch back to that whatever the invoice when you should have raised an invoice. So keeping that aside, so the due date for payment is ascertained from the contract, then the due date for making a payment, invoice should be issued, be honored that before that date. Where the due date of payment is not ascertainable, the invoice shall be issued before or at the time the supplier receives the payment. Please look at it. If you say on foundation 10% is payable, on foundation 20% is on first floor, further 20%, like that if you have defined, then it is not the date of payment, it will not come in the first clause. You go to third one, with third bullet point, where it is talking about where the payment is linked to the completion of an event, where the payment is linked to the completion of event, the invoice shall be issued on or before the date of completion of that event. The example which I just now said, on foundation, that means the event, it is linked to the event of putting a foundation. On completion of first slab, that event is completed. Then that event completion, invoice should be raised on or before that event. But if you say on 30th of every month up to 12 months from today, you're supposed to make a payment, then the 30th will be the date. That will be the date which is you're supposed to make. Now, what you can do in order to escape from this, especially the works contractor, the date of payment should be so worded that it is dependent upon confirmation and ascertainment and approvals, all those aspects, then I think you will not be falling into the clutches of this provision to raise an invoice. You might always try to take a shelter under this bullet point 2, where the date of payment is not ascertainable from the contract, then actually whenever the person receives the payment. In fact, I don't know how many of you have a clients who are a contractors. At least I can say 90% of us, I mean not us, the such clients would not at all try to ascertain the time of supply like this and made a payment of tax. They would have simply gone by the date of receipt of the payment and paid tax. We would have also certified the returns, I mean 9 when they are filing, or 9C certifications would have simply gone with it. So please be careful that there will be a generally a mistake from the assessee side who are contractors as far as the continuous supply of service. Be cautious about it so that you don't miss out when you are doing. There are ways in which you can overcome this while you are reporting, but you have to report it either by giving notes or by putting a disclosure, or something has to be done when you are doing or when you are issuing a 9C. This is what is my view, so you can think about it. When it comes to reverse charge mechanism for time of supply, it is similar to that as that of the goods. The only thing is here, in case of services, it is 61st day from the date of issue of invoice by the supplier. Say you get a invoice from advocate, you have either accounted or not accounted, but he has issued an invoice, you are having an invoice with you, but you are not paid tax. So upon completion of 61st day, you are supposed to raise an invoice on 61st day. If you are not raised, then your liability crystallizes and you are liable to pay interest thereafter. As I said, voucher I will not discuss. This already in case of a reverse charge mechanism, if a supply is from a registered person, he is going to raise an invoice. If a supply is not from a registered person, you are supposed to raise an invoice, a self invoice in terms of section 31. The issue is, in case of delay in raising a self invoice, whether interest is attracted, answer is yes. If it is yes, from when can I, if you see here the previous slide, you would have accounted for that on receipt of the services. If you are not accounted, then what happens is a major challenge, because I am the recipient, so I need to account it. Once I account it, the liability comes in. If somebody has not raised an invoice, if he has raised in case of sorry, I think I'll make myself clear. When supply is from an unregistered person, and if he has not raised an invoice, and I am going to raise an invoice, and I have not raised an invoice, whether the time limit applies of that whatever 61st day, answer is no. So whenever you raise an invoice, you pay. Otherwise, whenever you account, you pay tax on it. When it comes to ITC, whenever you make a payment, you will be entitled to take a credit. Whether the time limit of 16.4 attracts, answer is no, because the time, there's no invoice which has been raised in that case. So this is how we need to look at the issue in case of RCM, in case where the supplier do not raise an invoice, where only as a recipient I am supposed to raise a self invoice. The next issue which is there is what would be the time of supply in case of reimbursement of expenses to employees. This is again the context of somewhere I am liable to pay tax under the RCM. The same issue which I explained above, where you are supposed to raise an invoice. Please understand, when we are talking about reimbursement to an employee, employee is nothing but you. Employee is acting on behalf of you. So whenever your employee receives an invoice, that day will be counted, that has to be an obligation on you to receive that invoice as early as possible and account for it and make a payment. If there's a delay from your employee giving that invoice to you, the time doesn't get postponed. So that important point you need to know. And as the concept which I explained, if the services is received by your employee from a registered person, there would have been an invoice. Then you apply the principle in the normal course. If he is an unregistered person, whatever the discussion just now we made, we can go ahead and adopt the same. Okay. I don't know whether I need to cover the issue relating to the construction, because unless I explain the total aspects relating to the landowner, builder, etc., I think I can't explain this. What I'll do is I'll park this question, okay? And when it comes to all the questions and answers, if it's over still we have a time, I will come back and address this. Okay. As per section 31, raising of invoice within 30 days of service and not the date of cessation. If the value is not agreed at time of cessation, then what happens will be a challenge. Cessation means cancellation, or we agree to close the contract without completing the services. You're supposed to quantify that extent and raise an invoice and pay the taxes. But if we do not do that, what happens? There is no clarity. So each individual, we can take a certain stand and go ahead with that. Similarly, in case of liquidated damages, before I directly jumping to answer into this question, I would like to you to just know this: what is liquidated damages? If in terms of the agreement on happening of certain event, so much amount shall be paid by the person who has incurred the damages is set out, and on such happening of that particular event, the damages are paid. That is called liquidated damages. That is, the damages are set out in terms of the agreement clearly mentioned therein. So therefore it is called as a liquidated damages. Now if somebody raises a liquidated damages, whether it has to be what the time of supply. Say for example, I am supposed to supply certain goods within so and so time. Now, if the customer is supposed to accept that when I go and deliver the goods within such and such time, but if he doesn't accept and my vehicle is standing over there, for whatever the number of days delay, he's supposed to make a per day so much of damages he's supposed to pay. Now, I will make a claim for that additional waiting period charges. Is it an independent supply than that of my supply of goods? Answer is no. It is incidental or ancillary to the main supply. But the point in time I am entitled to receive this damage accrued to me only after happening of that event. So what is the time of supply? So in this case, in my understanding, you need to, though it's a composite supply, you need to raise a separate invoice for it, and on happening of that event you will get a right to raise an invoice. If there's a specific term in the agreement, you will when you are supposed to raise and collect it, that time of supply will be based on that. If there is no mention of that, then obviously the date of liquid damages will be considered to be a time of the damages will be considered to be. Sometimes it may so happen that uh, that particular you claim it, unless the other person accepts or certifies, it will not be confirmed. So then that certification will become a the aspect which will be counted to determine that when you are liable to pay tax. Having said this, though, one point I want to highlight, though it is relating to the Raghavendra session's topic, but it is very, very important for me to make out this point. The principle of composite supply or a mixed supply is for the purposes of identifying the rate of tax. It may not be relevant for the purpose of raising an invoices. So even though there is a composite supply, you may be raising a multiple invoices relating to the composite supply. You will adopt the same rate of tax. However, the whole thing for the purpose of determining the rate of tax would be treated as one service. So I hope that you are clear with this. I think I'm coming to the one of the last slides. This is merely if there is any change of rate between the period you have provided this service and later on date of invoice or a date of receipt of payment, then which one of these things you will adopt? Generally, there used to be a principle that 2:1. If a certain particular thing has happened on a particular day, whichever the event has occurred towards the two, which period two events have occurred, you adopt that and apply that rate of tax. So this was there, which we can apply. I think now I completed my deliberation. I am leaving open the floor for questions, and I will try to answer some of the points which I have not. I will skip if time permits. Madam, how much time we do have? Up to what time we are supposed to be delivering? Or our
6:30,
time
sir.
is up?
6:30.
Sorry?
Until 6:30 we can
Yeah,
take, sir.
fine. So we have half an hour time more. Yeah, any questions on the chat box, ma'am?
As of now, no questions, sir.
Okay. Any questions from the audience? You can. I think you can.
They can unmute themselves and they can ask.
Yeah, they can unmute themselves and ask. I'm really surprised. No questions are coming in. Okay. If no questions come, then I'll ask you a question. You are supposed to answer on a chat box.
That will be better, sir.
Okay. Right. I think then I will cover the some of the points which I had skipped. Okay. Okay. I'll take up the construction related aspects. Okay. In construction, as we all are aware, there can be a own development and supply or a sale. There can be a joint development. Here, the question is mainly about a joint development. In case of a joint development, primarily there are three parties: owner, developer, the buyer. What is that which is given by the owner to the developer or builder? The notifications which are issued of late from April 19 assumes, I repeat, assumes there is a transfer of development rights from the owner to the developer. Now the question is there a really, there's surely a development right, I do not deny that, but whether the development rights is transferred to the developer or only given to the developer to achieve the objective of the agreement or arrangement between them. I'll take one other example not connected to construction for better understanding. Now, say I give you a work to draw my financial statements. Sitting in my office because I'm asking you to prepare this financial statement confidentially. Now, when I have permitted you to come and sit in my office, open the whatever the computer and see all my records and access my computer, use my Microsoft Excel license, draw my financial statements in my computer. Am I transferring a right of use of my computer and information to you, or I am merely permitting you to use my resources for achieving the object which I have given to you, or for providing you providing me a services, you need certain resources, I am just enabling you to achieve it. I have never transferred that to you. What is transfer? Transfer means when I give it to you, it is no more lying with me. In the development aspects, in my understanding, always the development happens in the name of the owner himself, though done by a builder. People just generally get confused when the owner gives a GPA and using that GPA, developer does many of the activities. They assume that the activities are done by the developer on his own account in his own name. My understanding is, no doubt he is doing it, but in the name of and on account of a owner to fulfill the obligation of contract between the parties. So my understanding in that case is that there is no transfer of development right whatsoever by the owner to the builder, but notification has assumed it to be so. So each individually, depending upon the facts and circumstances of each case, they have to decide whether to go with the notification or take panga. There is a take a litigation with the notification and fight it out. That is an individual choice. Now, assuming there is a transfer of development rights. Section 148 gives a power for the central government to define for a certain class of registered persons, including procedure, blah, 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 to give a methodology of a payment of taxes and other procedures. So here, there was a notification number 4 of 2018, wherein it said, in case where the landowner transfers the development right, in exchange of which the developer constructs for the landowner, the time of supply for the transfer of development right and for the construction of services provided shall be the date on which the completion happens, or that whatever the project is handed over to the land. Handing over of the flat or the allotment letter to the owner. So that is a point of taxation. Now there's a basic question whether this section 148 can make the provisions of section 13 redundant, or is it only an option but not a compulsion? Why I am saying this is because there may be a situation where the developer is supposed to make a payment on certain things, but whereas he gets a credit only towards the end, will be of no use to him. So therefore, there will be a timing difference between the credit vis-a-vis the payment of tax from the developer perspective. There will be a challenge to meet that. So can I ignore this notification? Similar notification has come after 2019 as well. So that is where something we have to look at. In case of a RCM, now in case of a wherever there is a transfer of development right by the landowner to the developer, the subsequently it has been held that this is a before 2019. After 2019, it is in case of any of the projects, the developer is going to pay tax on RCM basis. If it is not falling in the RERA definition, then the landowner has to pay tax on a forward charge basis. Time of supply, wherever the project comes in, the as per the notification, the completion has to be the handing over of the flats to the owner will be the time of supply. If it's unregistered, there is a normal time of supply has to be adopted. This is as far as the construction related issues are concerned. Any questions, even at least on the construction related things? Any queries?
Sir, we got a question in the chat box, sir. GST was not paid for RCM supply related to the year 2018-19. If tax is paid now, say in July 2020, can we claim ITC now?
The answer to that is, first, whether the invoice, which was whether the receipt of RCM is on the supply where the supplier has not raised an invoice, then if you are raising a self invoice today and making a payment today, you can take credit today. I hope you got it. Whoever has asked the question. Because one is payment of tax, another is ITC. You making a payment today where you're supposed to have where the invoice is not at all raised. So the question of time of supply have been completed doesn't arise. So you're going to raise the invoice today and make a payment today. Since the invoice is dated today, the time limit for availing a credit is up to next financial year September. So therefore, no need to worry, you will be entitled to credit. But you should not have raised a self invoice in the previous financial year. So that is a point. Any other question, ma'am?
No more questions, sir. We'll wait for some 2 to 3 minutes, sir. If anyone is having any queries, please unmute themselves and ask, please.
Let me hear at least some participants. No participants have spoken till now.
One more question, sir.
A general question. Can a
uh,
GST auditor file monthly GST return for the client? You, like I was explaining, for transaction relating to the developer vis-a-vis owner, how the developer does all the activities in the name of and on account of owner, you as an auditor are also are filing the return on account of and in the name of client. It is, you are not filing as a you are not taking a responsibility of filing. You are merely filing in his capacity. So you can surely claim it, and there is no such obligation. You cannot log in your ID and file your client returns. That is permissible only that, GSTP license you have. In such scenario, if a authorization is given, you can log in through your ID and file your client's return. Otherwise, you are supposed to log in your client's return and file his return in his user ID and login. Some more chats have come.
Some practical issues in relating to credit note.
Okay. 1 minute. GST was not. Sorry, where is the question, ma'am? Kritika, I couldn't hear.
No, I'm just asking from the point of old, sir.
Yeah, can you just tell me, ma'am, please? Question again.
Some practical issues of credit note or debit note, sir.
Okay. First of all, what is this credit note and what is this debit note? Let's understand that clearly. As a chartered accountant, we understand debit note and credit note in a financial terms separately. My humble request is, don't mix up our common understanding of debit note and credit notes with the GST credit notes and debit notes. I repeat, you please continue to file your or generate your credit notes, debit notes as per your financial requirements as you are doing earlier. Don't try to modify or alter it or change it to suit to the GST thing. You may go wrong. GST credit note you consider it to be an additional document wherever required. If you are fulfilling the conditions of section 34, then you should get into raising of a debit note, credit note, as the case may be, where you need to alter the values and take back the credits or pay additional duty to enable other person to take credit. Then you get into the GST credit note, GST debit note. In fact, there is a in a credit note, you have to be very cautious, because if you do not ensure, even if you raise a credit note, you want to take back the excess payment of tax, there's one more condition attached to it, saying that the unjust enrichment concept is to be taken care. In other words, you should not have collected that money from the other party. What is unjust enrichment is very important to be known. What is the tax which we are handling is an indirect tax. What is indirect tax? A person is expected to put his hands into somebody else's pocket, take the money from his pocket and pay it to government's account. If he is not able to do it, he has to pay out of his pocket. That's a different thing. Now, today, when I say 100 rupees I am charging you, plus 18 rupees tax I am charging you, today I collected 118% from him, and tomorrow I realize I should have charged 112 rupees, and I issue credit note for that 2 rupees. Sorry, that whatever the 6 rupees. Does that mean that I surpassed the concept of unjust enrichment? Answer is no. Because today, when I raised invoice yesterday, he has considered his cost to be 118, and you would have priced the product accordingly and collected the increased consideration from the other person. So that burden would have continued further. So merely issue of a credit note by him would not be a sufficient evidence to establish the burden of, incidence of tax has not been passed on. We have to establish that it is not further passed on also. Then only you will be entitled to get a refund or adjustment of the taxes paid. So this you need to be very cautious when you are raising a credit note. Debit note is concerned, there is no much of a challenge, because instead of raising 100 rupees, you have raised 80, you are going to raise a differential tax. There will be a document, you will pay, he will take a credit. So there is not much challenge over there as far as the GST debit note is concerned. This is what as far as general thing as to debit note and credit note is concerned. I think somebody has asked a question.
This was raised in March 2020 and GST also paid. Now the client deny for payment. What to do?
Okay. The first question is it supply of a goods or supply of services? If it's supply of goods, then can you take back the goods and issue a fresh invoice? Or he has to raise that the quality of the goods was not proper, then he is supposed to get back that, raise a debit note from his side. Then I can issue a credit note fulfilling the conditions of 34. Otherwise of which you will lose both money and tax. In case of a services, having supplied a services, and if there's any, there is no deficiency of services, if he is not making a payment, the time of supply is, your time of supply is over, you are liable to pay tax on the amount charged, irrespective of the fact he has paid the money or not. So receipt of the money is not an important factor under the GST law to make a payment of tax. Similar to sales tax law. In the sales tax law, when you raise an invoice and paid a tax, subsequently if somebody did not pay the money for it, were you going back and claiming a refund of it from the government? No. Same thing here. The supply of a goods or services which has happened in the GST time and payment made, subsequently you cannot go and claim a refund of it unless there is a credit note which is issued to that effect for any of the factors mentioned under section 34.
Sir, we got one more question, sir.
Hmm.
As per the GST Act, the supplier has to issue either the debit note or credit note. In case of sales return, if purchaser is refusing to issue credit note, what is the remedy to the purchaser?
See, from the it is always the originator who is required to make a correction of the GST law. The recipient cannot, or the other party cannot alter the GST documents or GST liability. So that principle, let's keep it in mind. Here, if the supplier is not issuing a credit note, that is your normal civil law which will come into picture, where you have a right to ask him to give the benefit as per the contract agreed or the terms of it. You need to fight in the outside GST, not within GST. There's no mechanism under the GST to make it. If somebody has said, though not related to today's topic, please clarify the following issue, but there's no issue there.
Damodaran sir, please unmute yourself and ask your query, sir.
Okay. Right. Any other question, madam?
Sir, can we wait for one more minute, sir?
I have no problem.
Yeah, he has unmuted. Damodaran sir. Yeah, yes, sir, please.
The issue is GTA could not find the address of the buyer. So he tried to locate the address by using Google Map. But he has gone 4 or 5 kilometers away from the address of the buyer. Now they took some snacks and breakfast. At this juncture, enforcement authority spotted the carrier and issued notice stating that goods have been sent to somewhere other than the address of the buyer.
Okay.
Is it a punishable offense? Is it an offense?
Sir, I know you are asking this in the context of section 129 of the CGST Act, especially in the context of e-way bill. If you ask this question to the government officials, I'm not talking officer at the lower level, I'm talking I interacted this issue with the top officials in the government lawmaking committee, etc. The answer to the question was simple. Sir, if I accept whatever explanation you just now you told, everybody will say the same thing and try to evade tax and avoid tax. So I'm coming to, I'll answer to you separately, but I'm just telling what the officer explained, I'm just telling you. So where we would be stopping from, or where we would be allowing this to happen or not to allow this to happen. So we have clearly instructed our team, minutest possibility of any error, you go ahead and seize it. It is a burden upon the assessees to prove it. Let them prove it or do whatever they want. Let each one of them prove it. Let's not give the benefit to them, so that at least we make them cautious and evasion will come down and they will not take us for granted. This is what was told by them. Okay. But coming into the law, I'm telling you practically what what is the mindset with which they are working. I'm explained to you. So be cautious about it. But nevertheless, error is human is to err. Error happens, and every error is not to evade tax. But unfortunately, the wordings of section 129 is not so clear. It is talking about detention and release. It is not talking about actually collection. If the goods, they find that some goods are being moved, and it is found that it is not in accordance, movement or storage of goods are not in accordance with the provisions of the law, they are entitled to retain. And if they found, actually they have not told this, there is a tax liability, we have to deduce out of it. They can ask to pay the tax and equivalent amount of penalty. By wordings itself, you can get to know this section is applicable to a situation where the tax was not paid or avoided, and it is not supposed to be covering procedural violation. But unfortunately, none of the courts have read this provision in this context. They are simply gone with the violation of a rule, detention. But this aspect of payment of tax, when it comes, when already invoice is there, when the tax is admitted to be paid and he is going to pay, where is a question of paying a once again tax on it and a penalty on it? I think it is going to test the law in a days to come. Lot of water is yet to flow. Till then, people will be having this harassment, and it is one of the collection mechanism for the officers, personal as well as for the exchequer.
As you told, this is not the fault of the buyer as well as the seller. This is small petty error of the driver. And further, every transaction cannot be seen under suspicious circumstances. So they have issued notice and demanded penalty, as you told, penalty as well as advance tax.
Yeah, I think, sir, what is the action plan in such scenario? You have an option of executing a bond, objecting to it, and getting a goods released, and take the proceedings further in the appellate mechanism. 1, 2, you pay the tax and penalty, contest the issue, and claim a refund after succeeding in the appeal, having established the facts. So these are the two things. But it so happens sometimes the tax value, tax payable will be some 75,000, 2 lakh. The question will come, is it worth going for appeal litigation or paying and closing? So it is bound to be there. So until the law gets cleared, clarified, this is bound to be there. Harassment will be there, difficulties of businesses will be there. And this is not a new provision. The similar provision was there even in the VAT law. Now also it is there. Now they have no other channels open. This is the only channel open, so they always come on to this. That's all.
Yes, sir.
Okay, good, sir. At least one participant came out and spoke, so I am happy.
And one more question in the chat box, sir.
Yeah. If a
If
manufacturer, same, no? If the manufacturer issues credit note without GST to the dealer for volume discount for achieving sales target, is it mandatory for the dealer to reverse ITC on the volume discount received by him, as GST was not included in the credit note? See, here the credit note without GST, as I said, this circumstances which you are talking about is in the context of a financial arrangement you are having. There is a conditions under section 34 that if any discount not given in an invoice but subsequently been given as an arrangement agreed at the time of supply, before supply you have a contract and you are giving effect to that a subsequent period, then a credit note can be issued giving effect to that particular value of supply. If the value of supply is not getting altered for the purpose of GST, but the actual payment which is supposed to be made for that particular invoice is getting reduced through a credit note, the credit note can also be construed to be, a financial credit note is also construed to be a type of settlement of payment. In other words, say you're supposed to pay 100 rupees. Once you issue a credit note in some other transaction being adjusted to this, then it is as good as you have made a payment to that effect by account adjustment. So to that extent, payment is made. In my understanding, there is no requirement of reversal of ITC. The entire ITC can be enjoyed by the dealer. But there is one more challenge, whether there is a requirement of payment of GST on the volume discount having been achieved as another action, as an independent supply than that of a main supply. It's a matter for debate which is still yet to get settled, and a lot of confusion still exists on the same. I think the next question is on e-way bill. Better I don't know whether somebody else is supposed to talk on movement of goods, so I restrain myself with replying to the next question, sir. Please excuse me. Sorry. That is a e-way bill question, madam. E-way bill, some session is there, I think, no?
Sorry, e-way bill query you can cover, sir. No problem, sir.
No problem, huh?
Yes, sir.
Okay. Can we send a sample goods without delivery challan and e-way bill without raising a tax invoice? That subject to that, whatever the monetary limit and depending upon the goods, you can surely send the goods with a delivery challan and without e-way bill. And I don't know whether with delivery challan and okay, e-way bill is being raised. You can surely send it through a e-way bill, mentioning there other than as a supply. In the column which the nature of movement, you can select other than supply and send the samples with challan and e-way bill. There's no problem with that. Yeah. I think okay. I think we have completed the allotted time slot, but still I am okay. If any questions are there, I am free to answer. I have no problem.
Okay, sir. Thank you, sir. Over to our secretary, Salem branch secretary, C.R. Saranya for vote of thanks.
Good evening. I hope all of us started brush up and update GST Act through this web series. And I thank CA RAJESHKUMAR T R for detailed explanation on time of supply. Thank you, sir. And I thank Puducherry and Vellore branch for their continuous support in all the webinars. And I thank all our members for their active participation. Thank you. Advance Happy Independence Day. Jai Hind.
Madam, I think somebody is telling that Miss Satyanarayan, that he was unable to unmute.
I unmuted him, sir. I unmuted him. Now, sir can ask questions.
Sir, please ask.
Sir?
Yeah, please, sir. Please.
Audible?
Yeah,
Yes,
audible, sir. Audible.
My client is a seller who sold the goods to some other states, sir. And he has included that transaction in his monthly return and paid the tax. But the purchaser has not included that transaction in his monthly return. Now there is a sales return. Whether my client can reverse the ITC?
No, yeah. I mean, you mean to say you have to see, as I told, the person who is
whether it is necessary that the purchaser has to include the transaction in his monthly return?
No necessity. The credit note is supposed to be issued by you only, and it doesn't involve the recipient anyway in his thing. Okay, so you can always raise a credit note and adjust the taxes already paid, provided you fulfill all the conditions in the section 34.
Thank you, sir.
Yeah, I think.
Thank you, sir. Thank you. It was really a very nice session, sir.
I think before we conclude, I would like to thank all the 3 branches for giving me this wonderful opportunity. I thank all the participants and also wishing each one of you very, very happy Independence Day. Thank you.
Thank you, sir. One more question.
Thank you, sir. One more question. We got one more question, sir.
Sending one missionary to person.
Yes. Answer is yes. Yes, to raise a e-way bill.
Okay, sir. Okay, sir. Okay.
We are getting a lot of questions at the last moment, sir.
No problem. If anything is left out, you can always mail me or they can mail me. I think my email ID was there on the screen. No problem.
Yes, sir. Yes, sir.
Okay.
Or should I type it?
Yeah, better, sir. Put it in the chat box. So whoever wants, they can take it from the chat box.
Yeah, I have added.
Okay, sir.
Okay, sir. Thank you. Thank you
Thank
so
you.
much, sir.
Thank you, sir.
Thank you, sir.
Thank you.